After defining the direction of the major market trend on the first screen, and after defining the possible termination of correction, which goes against the major trend, on the second screen, we can finally move on to the third screen, and look for market entry points, in order to open a position. No indicators are needed for the third screen of the strategy. Here is the method of entering the market, after the first and second screens gave a signal to buy or sell. On the third screen, during an uptrend, the strategy generates signals, which called trailing buy stop. Accordingly, during a downtrend, the strategy generates signals, which called trailing sell stop. According to the rules of the strategy, in order to locate the entry point, trader should use the shortest time interval. In case the monthly chart is used on the first screen, and the weekly chart is used on the second screen, then, trader should use daily chart on the third screen. Here are the conditions under which trader should open a long position. Once the monthly trend is up, and the weekly oscillator is falling, the strategy activates a trailing buy stop order. It should be placed one tick above the previous day's high. If prices go up, then, trader will enter the market automatically, as soon as prices rise above previous day's high. Otherwise, if prices continue to fall, then the trailing buy stop order will not be executed. In this case, the next day, it should be lowered to a position above the high of the previous day. Trader should lower the trailing buy stop order every day, as long as it is not executed, or the indicator changes and the buy signal disappears. On the other hand, in case the weekly chart is used on the first screen, as recommended by Dr. Elder, you can also use daily chart on both the second and the third screens. In my opinion, it is quite obvious that if trader uses 4-hour or 6-hour chart instead of daily chart, then, in this particular situation he will get much more entry signals. A larger number of entry signals will inevitably lead to an increase in the number of false signals. Therefore, the trader will have to find a compromise. Either reduce the size of the stop loss by using shorter time frames on the third screen, or reduce the number of false signals by using the same time frame as in the second screen. Let's take a look at a specific example of the trader's actions during the process of opening of the long position. Let's assume that the trader has defined the direction of the major trend on the weekly chart. Suppose that according to trend indicators readings, the market is developing an upward trend. Then, using oscillators on the daily chart, trader determines that the market has entered a stage of correction against the major trend. Once oscillator generates a signal of possible completion of correction, trader will immediately have to switch to the third screen. In our case, let it be daily chart, and begin to use trailing buy stop order technique in order to open a long position. Look at the chart. After the last black candle on the chart is closed, trader will have to place a buy stop order in order to open a long position. This is because on this particular day, the oscillator on the second screen has entered the oversold zone. During the next day, the market does not create a new low. On the contrary, it begins to move up and form a small white candle. Immediately after the last candle is closed, trader must move his pending buy stop order one tick above the high of the candle. On the third day, the market continues to move up, and pending buy stop order is automatically executed. A long position is opened. After opening of the position, the protective stop-loss order must be placed. According to the rules of the original version of the strategy, if a long position is opened, Then, the stop-loss order must be placed one tick below the low of the current or the previous day. It depends whichever is lower. In a later version of his strategy, Dr. Elder suggested using the average value of the high or low breakout on the daily chart in determining the level of a protective order.